Hello and welcome to the first episode of FTSE Funds and Finance, brought to you by Goodwin Financial Services. I'm joined by Steve Goodwin, Financial Advisor, Josh Goodwin, Financial Advisor. Gents, so we're looking to try and bring this weekly podcast to try and discuss all things in finance, what things happened in the markets, what things affecting people's finance. I think we'll kick it off straight away. We won't delay too much. Is the number one thing that people are probably concerned about. Obviously, Liz Truss, new Prime Minister. The energy crisis is the thing that's on people's mind the most. So with what Liz Truss has brought in, how do you see this affecting people's money, everyday people, and how do you think it will affect the markets going forward?
Well, let's just deal with the markets first. Sometimes when you're British, you think that everything centres around the UK, and it really doesn't. The UK is a very small part of investments and portfolios in the world. Even if you take the FTSE 100, most of the income from the FTSE 100 is derived from foreign currencies and foreign investments. So the UK as a whole has a very small amount of impact. What you will get though, the smaller companies that derive all their income and growth in the UK, they are directly affected by what goes on here. But Truss and what she does will have an impact to our lives, but our wealth and finances tend to be derived from what happens in the US. So that's the first thing, because that's a common misconception out there about people they follow the FTSE and think that affects their money. It isn't directly.
Can I just ask on that then? Is the rest of the world seeing an energy crisis the same as the UK?
There are problems around the world, but for example, in America, they are potentially heading for recession, but they have got inflation in America is coming down. They seem to have already got that a little bit under control, although the Fed are sounding out that they're going to be radical and hitting the increase in interest rates, and we'll come on to why they're doing that later. But the whole world is suffering, but from the UK's point of view, we've been suffering worse because we haven't imposed the caps up until last week that the rest of the world had. And, you know, but going forward, Truss in itself could be a problem if what she said in the election. But however, I don't feel that what she said she's actually going to do. I think she was sounding out to the people she wanted to vote for her, which are the blue rinse Conservative members who want a reincarnation of Margaret Thatcher, and that's what she was appealing to, and that's where she got her votes from, and that's what she had to say to get elected. But it doesn't necessarily work. I mean, she was saying there were no handouts. Now we've seen the biggest handout in the history, which dwarfs COVID. So you've got to be realistic. I don't think some of the things she's saying or some of the economic policies she was trying to do, she's going to do. She can't do it.
So you say about handouts in terms of biggest handout. What Liz Truss has done in her package, she hasn't given it directly to the people, the general public. She's given it to the energy companies. Why is that different, and how does that affect the market?
Right. So in the rest of Europe, they've done it in different ways by taxing energy companies. If they're state ownership, they can affect it that way, but indirectly they're taking the money from energy companies, which are themselves. Now, if you pump money into the bank accounts of British people, we're going to have a COVID thing again where inflation gets fuelled down the line. Now, inflation gets fuelled by two things: giving people too much money and too much money circulating in the economy by government buying bonds and buying assets. What she's doing is actually paying the bills to the electric companies. So that stops the money flooding into the economy.
And the inflation grows if you give it to the people because they spend it on something else other than the energy. Is that what?
Correct, and that can easily happen because you've got this organisation out there that doesn't want to pay the energy bills. So the simple thing to do here is do what she's done, which is actually pay the bills to the energy companies and let people have lower bills. Obviously, this is only up until the election, which is obviously that's the way it's going to do. But perhaps by then things will be a little bit more under control. But the policy she's done is right because the UK would have been in carnage if she hadn't have done it.
Okay, so there's two things here. Obviously, number one is she's brought in this package to help. And Josh, I'll ask you a little bit here. How do you think that's going to? Do you think that's going to help inflation to a certain extent and to help the general public? And then the second thing we'll probably talk about is obviously this is now a huge debt being run up. How do you see this being paid back eventually? How do you think that's going to be? But the first of all, how do you think that's going to? Do you think this package is good? Do you think it's the right thing to do and for the general public?
Yeah, I think it's spot on. To be fair, I think they're still to announce the final details, but I think they're capping it at 2,500 of the average household, which is a big saving compared to what it was going to be if they didn't do anything. I think if the government didn't do anything, I think the amount of people that would have had to stop paying the bills just because they couldn't afford it anyway would have been humongous.
And this heat or eat was a real thing, potentially a real thing for people, wasn't it?
Oh,
As in,
hugely. When you go around speaking to clients and friends, everyone was really worried, and I think it just settled fears. I think it'll make everyone a bit more confident going into the winter and comfortable.
But it's still an increase from last year, right? So people still have to be careful. There needs to be a bit where people can't think, oh, okay, everything's back to normal, because there has been an increase.
There has
from
been an
last
increase,
year.
but I think a majority of people should be able to absorb this increase, but be unfortunately making cutbacks in their social lives.
Mm-hmm.
That's part of life, unfortunately. But they've done a massive help by reducing the increase, and I think we should all be quite happy that's happened.
And have you noticed that, obviously you do an awful lot with mortgages, have you noticed that now mortgage companies are factoring in this energy crisis? How have you seen it affect them?
Definitely. Lenders are now hitting the income multiples for buyers. I think that was always coming. I think hopefully now they've announced this package, it won't get any worse. But yeah, I've definitely noticed when doing mortgages that the amount of multiples they're giving to potential clients are dropping.
And income multiples, you mean by as in the amount of money that banks will lend
so
on?
Banks will generally take your income and times it by a certain amount. Usually the average right now is about 4.5, but I'm seeing it at the moment going down to 4 with some lenders.
Okay, and is that affecting people getting mortgages?
Yeah, it's quite severe. They can't borrow as much as they could have 6 months ago. Also, combined with the fact that interest rates have been shooting up, is making people rethink how much they're going to spend on a house. I had a client a couple of weeks ago who spoke to at the beginning of the year. He found a house that he liked. We went through the costings again, and he said, "Well, I'm going to have to buy a lot less on a house now. I can't afford that." I think that's going to be happening up and down the country, and I think eventually people are going to have to start paying less for houses, which should bring the market down, in theory.
And do you think that's what would happen, Steve, in terms of this? Obviously, the housing market could stabilise or potentially come down.
Well, there's two things that can happen. If we go back to the 1990s, where we had the bubble and we had 15% interest rates, people, all they ever talk about when you speak to clients is the market goes one way all the time. Well, it doesn't. In the whole 10-year decade of the 90s, house prices only went up 8%. Mm-hmm. So there was a crash and then a recovery, but the overall concept was it only went up about 8%. We could well be in for another scenario where for the next few years, it may not crash, but it may well wobble or sit at the current level. There are two ways this can run out, but there's still a long way in the UK for this to play out. We've got the wage demands, the strikes. You know, if people do get high wages, it's going to fuel inflation, and inflation is the killer of an economy. You have to bring inflation under control no matter what, because without,
so inflation is currently at
over 10%.
Yeah, 10% roughly, and obviously the government target is normally about 2%.
Yeah.
Obviously, they've raised interest rates. We talked about to try and curb some of this. Do you feel the energy cap is going to the thing to try and stabilise that interest?
Well, it will help, but you've still got more interest rate rises to come. I'm expecting 0.5% rise in the UK, potentially 0.75% rise in the US. Mm-hmm. The UK have delayed it by a week, the interest rate rise. So I'm still expecting more pain with interest rates to come. But we have to get that pain. You have to deliver the pain so that we get the inflation rate down quicker. If you don't control inflation, the whole economy crumbles and people's wealth falls to pieces because it's eaten away by inflation. So inflation has to be brought under control. And I understand people with wage rises. I understand people are paying for wage rises. But the bigger picture is we've got to suffer what we've got to suffer to get inflation down. Mm-hmm. And by the way, I do understand that some of these big earners are taking big pots of money, and that doesn't set a good example for the workers, because workers are saying, well, look, we're struggling here, and the big earners are taking big slices of profit. So, it should come from the top down, that everybody says, hold on a minute, we're all going to buckle up here and just wade through, because the quicker we get inflation under control, the quicker the interest rates come down, the quicker that everybody's life goes back to normal.
So in terms of average day people listen to this, their finances, what's the best thing they can do going forward, and what's the advice that, obviously I know clients is different, but what can people do now, looking across, to try and get themselves in the best position to try and protect themselves from this?
Well, everybody's different. It depends on your state of wealth. If you are our type of money, stop spending. Mm-hmm. Stop spending on your credit cards like people are doing. And stop and cut the luxuries back. I'm afraid you should cut the luxuries back. The problem you've got out there is that there are a lot of people that suffer genuine hardship, and it's because they can't help it. But there's a lot more people that suffer because they can't stop spending, and then they blame everybody else when they get themselves into a mess. Now, the first batch of people that suffer genuine hardship, I feel so sorry for them, because if you're on a very low income at the moment, inflation is running riot and food is going up, you can't adjust if you're on the breadline already. So they are the people that I feel really sorry for. But there's not so much they can do. There's not a lot they can do without government help. The people in the middle, well, they need to cut back on their spending. And the ones that have got a bit of money, well, they probably will cut back on spending. But the problem is, if you have to cut back on spending for too long a period of time, businesses go bust out there. The restaurants will go, the pubs will go. So this has to be short, sharp, sweet, and get back to normal. If it's prolonged, and what I mean prolonged is by people giving higher wage rises, from people taking, from giving, the big earners taking too much money. If you get that and the whole situation is prolonged, everybody gets worse off. So what I expect trusts to do is to really come down hard on wages. I do not believe she'll give in a cow down the wages, because if she starts, the whole thing starts to explode, and then you get inflation running riot again. So that's what I expect to happen. So we could have a winter of discontent. But if you go back to Thatcher, when she took over, inflation was running riot, and within about 2 years she got it under control. And then the economy boomed. And this is what has to happen here. America's doing it, so we have to do the same.
Do you think it'll be the same time frame? Do you think it will take 2 years to get this inflation under control and get it back?
Yeah, I think by the end of next year we'll start to see. I think we'll start to see things coming down next year if the policies work. And I think in theory, by the end of next year we should be back to a sort of a lowish type inflation. Inflation will come down fairly quickly, because if you take out energy and you take out food, we're only running at 6. So I think inflation will come down to the 4s and 5s relatively quickly, but you've got to get it below that. So it's the push down below that's important. And that's going to depend a lot on various countries are going to be different, because America is different than we are, and it's how you do that. I think America, for example, will get this under control fast and sharp, and this is why the bank over there, Jerome Powell, is saying I'm still going to be putting the interest rates up, because he really wants it under control. So it's the third year of an American presidency next year, and they don't want Trump in under any way, shape or means. So they're going to want to try and make the economy as good as they can, so that Trump can't feed on discontent. So the American psyche is really to dish the punishment now, and then next year bring it down. And I expect to see America flourish in terms of markets and asset prices next year.
Okay. And with the interest rates we talked about going up, Josh, coming back to you, obviously you've got people that's on mortgages at the moment, their mortgage deals are going to be coming up to thing. What advice would you give to people, if their fixed terms come up to, soon, is it something they need to look at relatively soon rather than leave them? Because if you're expecting interest rate increases.
Yeah, rates are going up all the time. Obviously, as Steve mentioned earlier, the Bank of England are due to increase them by another 0.5% next week. So obviously, the longer you leave it, the rates are just going up. Generally, remortgaging your current house, you can start looking at it about 6 months before. So I'll definitely, as soon as that 6 month period, I'll start looking straight away and see if you can secure the cheapest rate there and then.
So people don't want to wait until they want to try and find out where their fixed term ends, try and have a look at that now and try. And obviously I know some have early repayment charge and stuff like that, but that's the idea really why you need to try and have a look at it, don't you?
In terms of the 6 month period, hopefully, because you're doing it 6 months before, it gives you time to see out. Sometimes lenders let you product transfer before the 6 months are up anyway, or if you remortgage, it's cheaper to go somewhere else. You can secure that rate up 6 months in advance, so you can just wait for your mortgage term to end. At the end of the 6 months, you've done it 5 months before, it don't just go automatically because everything's done.
Okay.
Something, Josh, that we spoke about before, though, is that for the last few years, it's been a no-brainer to do a 5-year fixed rate. It's been the automatic default position, because rates were low and you could secure. It's no longer the default position to do a 5-year fixed rate, because if you believe interest rates are coming down, you don't want to get locked into a rate that's going to be more expensive than where we may be in 12 months' time.
So it's really important to get the advice to make sure the next mortgage you get now is important to make sure you get the right. Exactly. Like you say, you're not tied in for too long, and you can take.
That's a personal preference. If you want security, you want to gamble that you're going to get the cheaper rates. That's what you discuss with your advisor. Yeah,
and I guess everyone's circumstances is different. Thing. And just to finish off, we just come back and say, obviously this trust we're talking about, obviously this energy cap she's brought in, it's obviously a huge debt to the country. How do you foresee we're going to pay this back, and what's that going to mean to the average person going forward? Where are they going to pay for this eventually?
Well, there are two ways that debt reduces. One is by inflation, because if inflation runs at 5%, the debt reduces in real terms by 5%.
Mm-hmm.
You have the inflation situation. You have the fact that if you get interest rates lower, the government payments are lower. That's why you've got to, people don't grasp that it's in the government's interest to reduce interest rates as soon as possible.
Because low interest rates reduces their debt, right? Their payments on their debt.
So therefore,
their debt, they pay an interest rate the same as we do if you get an interest rate from the bank. So that's why the interest rates are being
they can't afford the interest rates to be high for very long. Mm-hmm. So at the moment, they need to get it brought down. But then the debt does remain. And if you're not going to tax these energy companies, the only way that you're going to have to do it is by creating economic growth. If you create wealth in your country and growth, then you get higher taxation by the fact that you enable growth to go. And Truss is of that ilk. She's got the same sort of type of theory as Thatcher had, which is we will low tax, but we will tax more because people will earn more. And that's her policy. That's the way she's going to push forward. And that's one economic thought process. Other parties think differently, but as far as Truss is concerned, she's only got till 24, and at the moment she's behind in the opinion polls. And if you get a Labour government, it's totally different. Be a totally different policy. So it's going to be hard to know what they're going to do with that, because we're not going to really know who's in power at the time. But I think what we have learned is austerity does not work.
Mm-hmm. So in terms of, just to wrap up, in terms of the best things that people can do at this point in trying to think, obviously look at their finances, try to keep their spending down a little bit if they can do, especially to look forward for the period of the winter months.
But also if they have somebody, a financial advisor, and we're not talking about somebody who thinks they know what they're talking about, financial advisors, if they take small clients on and a lot don't, can be a godsend, because they can help somebody look at their budget and change their life.
That's one thing I want to pick up on just briefly as well. People have this notion that financial advice is for just the wealthy, but that's far from the truth, isn't it?
Well, it is for 95, 97% of financial advisors. The truth is that most financial advisors who are qualified to our level only want the big clients and won't take the small clients. That's just how it is, because it's not economical to take small clients on. You lose money by taking small clients on. We're not like that. We take everybody on, because our theory is if you take somebody on and help them, you help them grow and become more wealthy, then down the line, they become a bigger client. But financial advice, if you can find the right financial advisor, does mean you can get that even if you need help, because they will help maybe on a pro bono basis to help out to start with and just help change your life around. We've done that for several people.
So get advice is the thing. So that sort of wraps up the first episode of FTSE Funds and Finance. If you need financial advice, obviously we'll put all the information up of where to contact. Gentlemen, thank you. If anyone watching, if there's any topics you'd like Steve and Josh to discuss and for us to talk about in this forum here, please let us know. And so we hope to do this weekly and put out as much content as we can. But if you do need financial advice, please get in contact, and we'll hopefully bring some more content soon. Thank you, gentlemen.